Hi, I'm Wayne Best, Visa's Chief Economist. In this edition, we're going to focus on the state of the consumer and how it impacts the housing market. If I go back over and look over the last 3 economic cycles, the housing market generally rebounded in about a year or so in terms of housing starts specifically. This time it took 7 years. So that was a very long period of time that we just didn't have this important part of the overall economic recovery, but housing really has become invigorated. And we're seeing the improvements in the housing numbers and people increasing in terms of household formation. Well, according to Visa's Retail Spending Monitor, which looks at the spending on all forms of payment on a near real-time basis, home improvement stores have been doing pretty well. People want to fix up their homes and have other improvements that they want to make. Housing has a really big impact on this economy, not just through the building of those houses, but for every house that's built, 4 jobs are created, not only in the direct of building that house, but all the indirect effects. As new home construction improves, as we sell more homes, you generally have to furnish them. So furniture sales end up seeing improvements, appliance sales sees improvements. It ends up resulting in additional spending that occurs in many sectors of our economy. There's a connection between job creation, wage growth, and of course housing. The job picture in general over the last year or so has been very positive. Now, if we look at the most recent data, that hasn't been much the case. And maybe some of it is related to reporting issues, and we may see some revisions. As we look at wage growth and as it continues to improve on a month-to-month basis, especially if we look at just the same consumers, which are growing at close to 5%. Having more money and that wages rising increases the confidence of consumers and allows them to start looking at homes. If we look at the current numbers, a home is considered unaffordable when it hits a median multiple of 3.0. There are areas of this country that are severely unaffordable now. And those areas seem to congregate around tech hubs that we see in the United States, along the West Coast, parts of Florida, and even the Northeast. I would be concerned if we saw a tech correction or another type of correction that would have some impact on housing prices in those areas in the future. Other risks that we see out there in the economy is related to what the Fed is going to do next. Whenever interest rates go up, there's obviously the concern about whether or not mortgage rates will also follow closely. And if they do, will that have some dampening effect on the housing market? Because we're at very, very low rates right now, we don't believe that the next couple of rate moves by the Fed will have a material impact on the housing market. The economic cycle of employment, wages, and housing are now all starting to move in unison. And that's going to help the balance sheets of consumers and also the spending they're likely to do in the future. The consumer is coming back. They're spending more. And wage growth is also happening. And as I mentioned today, even housing is showing some rebound. All of that bodes well for the future state of the consumer as we move forward. The prognosis for the economy is cautiously optimistic, but we think it's well on its way to a sound bill of health. Thanks for tuning in. We hope you found this information valuable. Additional details can be found in our Chief Economist newsletter on our website.